fun. And speaking of fun, I overheard somebody over here on the front row, I'm not going to call them out, it's not you. They said, what session is this? And they're like, oh, nonprofit tax filings or whatever. And it's like, yeah, it's not the session I want to be in, but it's the one I definitely need to be in. Right here. So, hopefully I know that sometimes it's a little, tax and compliance feels a little bit dry, but hopefully everyone will take something away that's valuable for your organization and help, keep your nonprofit out of trouble. And just really quick, my name is Stephanie Bailey. I'm a partner at Core Business Advisors. We are an accounting firm in Oklahoma City. We specialize primarily in tax services and then also kind of fractional CFO and other bookkeeping, controller, accounting service work as well. We're a little bit unique, I would say, for a firm our size because we have pretty robust expertise specifically in the nonprofit sector, but we also work with for-profits as well. But it really gives us a really broad spectrum to work with across clients to really help kind of bring some expertise and some support. And one of the things, I've been in public accounting. I was a director at KPMG servicing exempt organizations. When I say exempt organizations, that's not just public charities, that's private foundations, higher education, governmental entities. We did some tribal work as well, and really focused on the tax side. And then I've been a CFO at several different nonprofits as well. And so I think that's been really nice because it kind of helps sort of align the discussion points when we're talking about dry topics like UBI, which we'll talk about, and compliance and tax and everything like that, for like kind of bringing it back to, what's the day-to-day impact for your organization. So kind of why does this matter? I think there are a few things, for most everyone in this room, you are affiliated with, whether you're on the board or a volunteer or an employee of a tax-exempt organization, or what we can call in short a nonprofit. And nonprofits have this really prestigious special status of being tax-exempt. And when you think about tax filings or compliance requirements and reporting, really at the end of the day, the biggest risk for most nonprofits is ultimately losing your exempt status. And so it really can't be more important, because if you're not a nonprofit, then you are a for-profit, and that's probably not congruent with anything that you're actually trying to accomplish with the day-to-day work that you have. So I always try to lead with that because I think it just kind of sets the tone of like, this is important and this is why we're here. But also when you think about the work that you do, the reporting and kind of bringing a level of sophistication and knowledge and information to your boards, to your funders, it really builds more confidence for them and helps them feel like, hey, this is a really good, safe place for us to put our money and to entrust with these funds. And then also for exempt organizations, the IRS over the years has really revamped sort of the filing requirements. So Form 990 is probably what you most often hear about. And it's a really beefy form and a lot of information, but also in this sort of quest to request more information and more transparency in the nonprofit sector, they've also tied really, really high penalties for late filing and failure to file. Because I think oftentimes, especially at some accounting firms, people say, oh, we have this nonprofit return, we need to file it, they do volunteer stuff, we're not really sure. And it kind of becomes this sort of back burner thing. The IRS says, no, we're gonna put huge penalties on lack of filing for these organizations because that's how critical it is. All right. And this is just kind of an overview of some of the topics we're going to cover today. What was really helpful, I thought, was I had a call with Vince and Tammy and really talked through like, hey, I know that the finance topics can be a little bit dry, but what's going to be the content for really bringing the most value for the constituents that are coming, and what do we really want to talk about? So when I was kind of pulling the presentation together, I was like, I feel like this is all over the place, but they were like, what about this, and what about that, and what about this? So we're going to try to bring it all together, but if there's something that we don't cover or something that maybe we need a little bit more depth in, we can certainly either try to talk about it during the presentation, or I can provide my card, or we can talk about it after too. But it may feel like we're jumping around a little bit, but that's intentional because Vince and Tammy wanted me to talk about quite a few things. Are the other presentations available? I believe so. I think they normally do distribute them. But again, I will leave my email address will be on here. And so if they don't distribute it, just jot down my email address and send me an email and I'll send it to you. But I think they provide. Oh, there's Tammy. Thank you. Okay. So we're going to jump in really directly with compliance. I'm a tax accountant by trade and in my heart, and so that's just where I like to start. So one of the things that we're going to talk about is you're an exempt organization, and you likely, if you have exemption, you have a filing requirement of some sort. And it may be a really small, easy one, or it may be a bigger one. And how the IRS determines what filing requirement you have as an exempt organization is going to be based on these thresholds. So Jason told me I have a laser. Yeah. So if you are an organization with average gross receipts of $50,000 or less, then you can file the 990N, and we usually call that in practice the e-postcard. It's really easy. We're going to talk a little bit more about that in a few minutes. If your gross receipts are between $50,000 and $200,000, then you can file the Form 990EZ, which is a short version of the full Form 990. When I say gross receipts, that's going to be all of your revenue, right? Before you subtract for any expenses or anything like that. So donations, program revenue, fundraising event revenue, grants, all encompassing of that are where these thresholds come in. And then if you have assets, if you have gross receipts over $200,000 or total assets over $500,000, then you have to file the full Form 990, which is pretty beefy, like I said. And then we may have a few in here who are private foundations. And if you are designated as a private foundation, then you file Form 990-PF, which is a totally different form with several other different requirements. So I kind of want to get a feel, because it'll help me a little bit, I think, to tailor the presentation. I put slides in for a range of the filing requirements, but I kind of wanted to get a feel. How many in the room think we're e-postcard people 50,000 or less? Can you raise them high? Okay, like most of the room. Okay, that's what I thought, and that's what Tammy and Vince and I had talked about, that we thought. Okay, what about between 50,000 and 200,000? Couple? Okay, great. And then over 200,000? Okay, perfect. So there is some full Form 990 stuff in there, just because I wasn't really sure if there would be some who would pass that threshold, but we'll probably brush kind of right on by some of that. Is there anybody who's close to the 200,000? No. Okay, perfect. And then private foundations. Maybe one. You and I will have a special session. Okay, yeah, we'll do something different. Okay, cool. Awesome. Okay, so we're gonna probably spend, since the majority of folks are in that 50,000 or less, we're gonna spend probably quite a bit of time on the filing requirements for that group and things to really to think about, okay? And many nonprofits can file the Form 990N. It's very simple, but it's so simple, people forget it, and that's why I think Tammy and Vince were like, let's do a session, and just at least, if nothing else, it's one annual reminder. So I think that's really great. And just keeping in mind also, regardless of which status you are, filing the wrong form, let me rephrase that, let me say it in a positive. Filing the right form is really, really helpful. Filing the wrong form is a huge red flag for the IRS. So what I would encourage everyone to do, I think I made, a little tip, is if you have your IRS determination letter, that's what the IRS issues that says, hey, you get to be an exempt organization and this is what kind of organization you are. I would just go double check that. And if that's not available, you can go on the IRS tax exempt organization search, and you can search for your organization by your EIN or by the name, and it'll pull you up. That's where they kind of have all your publicly available 990s and things like that, but it'll tell you like what your public charity status is too. And so I just think that's always really helpful. It'll also tell you if you're like not a qualifying organization anymore, if perhaps you lost your exemption and you didn't know that. So I think it's just a really good best practice to kind of double check and just make sure that this is, you're filing what you say you are. I will say the IRS is a lot more sophisticated now with their systems. And so if they think that you're a private foundation and you try to file a Form 990 EZ or an IN, they're going to automatically kick it back. They probably won't even let you file. So there is some checks and balances there. Okay, this is the busiest slide I think I've ever presented with, and a lot of the slides in this presentation, I'm going to tell you that is really not my style. Usually I'll throw like 5 words up there, but knowing that this can really be used, because I see people taking pictures, that's why it's there, yeah. I want this deck to be able to serve as a tool for you all also, so that you can reference back and kind of look at the details, but knowing that tax law and compliance requirements are so convoluted that it's really impossible to put everything on there, but there is a ton of nuance to some of this, and so I kind of included more detail. So please don't criticize my slides being too busy or too detailed, because it's intentional for this session. On the 990N filing, which I'm guessing if generally everybody's like, hey, we're under 50,000, you're probably a 990N filer, and that is great. What happens sometimes though is you may dip like below or maybe a little bit above that 50,000 in any given year, and that's where all of this detail really comes in handy. So if you are, the way that they define like gross receipts and total receipts, because in the definition it says, hey, average gross receipts of 50,000 or less, but they have a whole definition for what that means and how you determine what average is. So if you're a new organization and you're in your very first year, you can actually have $75,000 or less, right? Because they know in startup years for exempt organizations, there may be an extra infusion of cash that comes through that first year. Well, they don't want to penalize small organizations for that. They say, hey, if it's your first year, don't worry about it. You can go up to 75,000. Also, I meant to check this. I have no idea when the last time they updated these thresholds are, but I've been practicing for quite a while and I've never seen them updated. And like so many thresholds for the nonprofit sector and filing and requirements for donor acknowledgement letters and things like that, they don't adjust for inflation. And so it would be interesting if they took a fresh look at some of these thresholds and said, hey, what really is considered a small nonprofit that should maybe have less stringent filing requirements right now? And I would think it would probably be, they'd up these thresholds quite a bit. And then if you're in existence between 1 and 3 years and you average 60,000 or less in gross receipts during your first 2 years, this is what I mean. They get really, really detailed. So if you're just in this weird place where you're kind of an earlier organization, you have some additional considerations for what your revenue can be. And then if you're at least 3 years old or older, just know that you can take an average. So if you go up above, if you go to 60,000 one year, that doesn't mean you automatically have to file the Form 990 EZ. So just make sure that you're checking that threshold. I know even a lot of CPAs will be like, oh, you're over the 50,000 threshold, we have to file an EZ now. Well, that's not how it works. There's actually a test. There's a little bit of leeway there. And just keep in mind, there are some organizations that are not eligible to file the Form 990 EZ, even if their gross receipts are less. So one of those is going to be the private foundations. And there are other exempt organizations that aren't 501c3 organizations, or 501c6 or 501c7, social clubs, things like that, that I don't think is applicable to anybody here probably, but just knowing there's some nuance there as well. And then also, this sometimes gets a little bit muddy. If you are part of a group exemption with a larger organization, you may not actually be required to file. And so if you feel like you may have some relationship where you're grouped in with a larger organization and they're actually filing on your behalf, that can happen sometimes too. normally there's a letter from the IRS that states that that's the case too. Okay, when are the returns due? So whether you are filing the 990N or the 990EZ or the Form 990 or the Form 990PF, it is going to be due the 15th day of the 5th month after your year end. So if you're a calendar year end, that's going to be May 15th. Then if you're a fiscal year end, right, then it's going to shift for each additional month. If you go, I say this later in my deck too, the IRS has actually started to provide some really incredible resources for exempt organizations. I've seen a ton of traction, but if you look at, like, even if you just Google nonprofit 990 deadlines or whatever, it has this really handy chart and it shows you every possible fiscal year end and it tells you what your deadlines are. And so I think that's just a really, I need to put that in my slide deck next time, but it's a great chart. Even if you just Google like nonprofit tax deadline, it'll take it to you and it's on the IRS website. I may add it, Tammy, before we distribute my slide deck, if that's okay, because I do think that's really helpful. Because even we all do it, right? We're like, okay, if I'm a fiscal year, whatever, 1, 2, 3, 4, so we'll save you some time on the math. There's a Form 8868 that can be filed as an extension for Form 990 or 990EZ or Form 990PF, and that gives you a 6-month extension. So if you're a calendar year filer, you file your extension for May 15th, then that extends your return out to November 15th, and it gives you a little bit of extra time. And if you think about it, you're a calendar year filer, you have until the month before your next year end to actually file that return. So it's quite a bit of time. And depending on, some people are really aggressive about trying to get their 990 finalized and finished. Part of that is just to kind of get the statute of limitations started and kind of moving that along quicker. But it just sort of depends. And for those who are using the Form 990 as like a tool, like some people use it as a fundraising tool, or they issue information from it in their annual report, or whatever reason, different organizations have different stakeholders that use that form for various reasons. If you wait until November, then the information just might be quite dated by that point. So. The caveat to this, since most of the folks in the room are Form 990 in e-postcard. I say form, it's not actually a form. It's an e-postcard, but if you are filing a Form 990 in e-postcard, it does not have an extension. It is just due on May 15th. There's not actually penalties for a late filing for that. But if you miss that filing for 3 years in a row, then they're going to automatically revoke your exempt status, which is a really big deal. And that's where I was talking about, I think sometimes the e-postcard is a really, really easy form to forget to file because it's almost clerical. And so people forget about it, and then, or there's transition at the organization and someone else leaves, and then it doesn't get filed. So that's a really, we've actually seen such an uptick in auto revocations, especially since COVID, that it's been, I think it's pretty, it's just been really surprising. And then organizations have to spend a lot in resources and funding to be able to go back and get that status reinstated. And then I noted on here for the late filing, I talked about this a little bit earlier, but there's a threshold, I think it's like $1,028,065, or it's some ridiculously weird number, is sort of the threshold. And if you're under that, then it's a $20 per day penalty for not filing your 990 on time. And that goes the same for the 990EZ. And then if you're above that threshold, then it's $120 a day. So if you think about it, most people aren't not filing their 990 and then remembering like, oh, the next day I forgot that I didn't file that return, right? It's like months later where they're like, did we ever take the 990 to the board? They're like, oh, we didn't. And it was, 4 months ago. So that daily penalty adds up, but it is maxed out at $12K for the smaller organizations and $60K for the larger. Okay. And then I'm so glad I put this in here since we have so many 990 in filers. when you have to e-file the Form 990 in, and it's on the IRS website. Go to it, and it just asks you a series of questions, and it's kind of like a little box. So I hope no one's intimidated by it. But these are the specific information inputs that the IRS requests when you're filing your 990 in. So I think also it's nice to just have that information ahead of time. And it's generally going to be the same information year after year. Your EIN, if you're a calendar year or fiscal year, and what fiscal year you are. Keep an eye on if your principal officer changes or you move or you change your address or something like that, to keep that in mind. And then confirm that gross receipts test that we talked about. So remembering that there's some nuance to that, but just making sure that your average, you're still meeting those threshold requirements to qualify for the filing. I like how they just randomly threw this in there kind of, but it's like if you are deciding to terminate as an organization, there's a little checkbox that you have to say, hey, we're going to terminate. So that's kind of their way. They're like, you're a small organization and you just need to let us know if you don't want to do this anymore. One thing I will say, and I can't remember if I put this somewhere else, but I'm going to go ahead and talk about it right now. So a lot of times organizations will say, hey, our gross receipts are less than $50,000. We were classified as a public charity. We have our letter from the IRS. They said, hey, you can do this. You're a public charity. Great. We're going to file our 990 in and we're going to move on. So more recently, I was looking at a new client return, and they said, hey, we always file the 990 in. Can you file it for us? And I said, well, sure. But I said, can you go ahead and send me your financials? They're like, well, why? Nobody's ever asked that. We're under the 50,000. The other thing to really keep in mind is that there's something called the public support test. So in order to be, this is what I told you I was going to touch on, but we won't go super deep, is in order to remain a public charity after you're granted that initial status, you actually have to prove that you continue to receive public support. So there are two main buckets, right? 50c3 organizations. You can be a public charity or a private foundation. If you're a public charity, that means that you receive the majority of your funding from public sources, so from different sources. There's a caveat here for government that falls into that too, which is your question. For private foundations, those are really funded by maybe one or two funders, right? So maybe a corporation is funding a private foundation, or an individual, it's a family foundation, something like that, okay? So those are kind of your two paths. There's a test that is included that you can file with the Form 990 EZ or the Form 990. It's called Schedule A. And that is the public support test. And that's the actual mechanical calculation that says, here's my public support, here's how much unrelated business income I have, here's my income that's only from that one donor, and it really does this calculation that says, hey, this is how much public support you have. You have to meet 33.33%, which is the most random number, to be able to still qualify as a public charity. For some types of organizations, there's a 10% facts and circumstances test. It's really detailed, and we don't have time today to go into all of that. But what I would just say is that it's helpful to kind of take a look at the public support test, and I'll put a link to Schedule A in here too. Yeah, so there's a calculation on Schedule A that's part of the Form 990 series, and it calculates how much of your revenue is public support versus not. So if you receive, if you have a fundraising event and 50 different people give you donations, and they vary in size, right? Let's say everybody gives you $100 at the fundraising event. Let's say that's your only revenue for the entire year. That is all public support. You're meeting your public support test. Let's say the same scenario is you have a fundraising event, 100 people each give you $200 or whatever it is, right? But then you have a single donor that is Stephanie Bailey, and I grant you $400,000 every year in addition to your fundraising event. which means I'm supporting whatever it is that you're doing, your exempt mission, right? That would tip you into being a private foundation because you are receiving a significant amount of your support from a private source, okay? I don't think that that's likely the case here, and part of what they do is there's a really specific percentage breakout for that. You don't have to disallow like all of that kind of single source income, but it adjusts your percentage for saying like, hey, like generally you're receiving less than 33 1/3% of your support from the public. So it tips you. I saw a hand. It depends who it's from. Yep, okay, so that's okay. Yeah, so government entities get treated as public support, and I probably should have led with that, huh? Right, yeah. Yeah. So this is more like when I said like individuals, corporations, those kind of organizations, that's what's gonna tip it. But your government grants, quasi-governmental tribal support is gonna be up there too. So I think that's not really applicable, but I just say that because I see sort of a total neglect on the public support test, and sometimes things change in an organization or their makeup where they kind of start out and it's all, grassroots fundraising or a small grant from the nation or whatever, and then it turns into something else where one person or one company says, hey, I want to step in, this means a lot to me, and I'm going to fund this. And I'm going to fund them expanding their operations, and that's really more where we see that happen. Does that make sense? Did I give everybody a mild heart attack? Okay. Sorry. Okay. Any questions on the information for the e-postcard? How many people are calendar year filers? Do you know? We have some fiscal year? Okay. Did everybody file their May 15th e-postcard? Yeah, nods. Okay, good. Awesome. And if you haven't, again, there's not a penalty. It's just go ahead and go file it if you can, because we don't want it to skip. The other thing I was going to mention about that, and this is not tax related, I would say this is more governance or compliance, is that the annual filing is a really big deal, again, because it can impact your exemption. And so look at your policies or your processes or whatever it is, and I know some of the organizations are smaller or volunteer-led, but just make sure that one person alone isn't in charge of making sure that the 990N gets filed, or the EZ or whatever it is. So making sure there's someone, maybe a volunteer and someone on the board, or that there's some formal process that's part of your cadence. So, hey, we elect new board members once a year, right? Like, make sure those people know that a 990 needs to be filed or something like that, right? Like, just kind of getting a few more cooks in the kitchen, because that's where we see the loss of exemption happen the most. Well, Patty always took care of that, and she did it every year. Well, Patty left, and nobody did it for 3 years, and now we're not a nonprofit anymore. Okay. This is a 990 best practices slide, and I know that we don't have, I think we only have maybe one, actually no 990 filers for the full 990, but we do have some EZ folks. But I also think for the folks who are filing Form 990 in, I think this is still really helpful. The 990 has a series of governance questions in it, and it says, hey, do you have this? Do you have a conflict of interest policy? Do you have a whistleblower policy? Do you have a document retention policy? Are you sharing your 990 filing with the board ahead of the IRS filing? Just kind of a series of questions, and really the IRS uses that to say, like, kind of as an audit tool that says, hey, if you say no to any of these, that's a little bit of a red flag. So not that anybody's going to go read the 990 in their free time, but if you did, the governance section is the one thing that I would read, because it really is a best practices for nonprofit checklist. Okay, we're going to skip that. Time. Okay. And then this is going to be more for the folks in the room who are filing 990 EZ, or if you all are on boards or other organizations that file the Form 990. One thing I'll just say, because I think this goes probably across the board with everything, but the IRS they're cutting back their workforce like between 40 and 50%. They're losing a lot of IRS workers and a lot of people who are out there in the field whose job is to really uphold transparency and compliance requirements for nonprofits. That keeps everybody's funding safe and sound and gives us confidence in the whole system and what it's doing, right? But one of the things that we've heard come out is perhaps don't expect maybe less audits, but just smarter audits, right? Because just like at the state level and the federal level, with technology, with AI, with data analytics, like they're able to really do more with less, and they're able to use some of these tax filings as a way to kind of mark red flag, like, hey, you're doing this, or you didn't file for 2 years, maybe we audit you because perhaps you don't have good governance, or whatever it is, right? So they are becoming more sophisticated, and things like filing the wrong form, filing late, especially consecutive years, can be a real red flag. And we're all trying to avoid being audited, right? So just don't make it easy for them. Who in the room, I meant to ask this earlier, who's in charge of making sure that their Form 990N is filed? Okay, so you guys are gonna go back, so there's only like 6 people who raise their hand, and you're gonna go tell whoever's in charge of it all this stuff, right? Okay. Okay. Next, we're going to talk about unrelated business income. And for some of you, and I would say most of you, this probably isn't relevant based on kind of at least my kind of working knowledge of the types of activities and programs and fundraising events that you do. But there may be some applicability, and the rules can be nuanced, and it really kind of depends on exactly how you're carrying out your different activities and events. So we're going to talk through this, and if you're not sure it applies to you, one of the things I'll just say is that these determinations are really facts and circumstances based. So you say, oh, well, I think we do that, like we do bingo, or we sell merchandise, right? That doesn't necessarily mean that it's UBI, it doesn't necessarily mean that it's not, but there are different facts and circumstances that kind of go into that. And so hopefully this will help, but if you're sort of worried about something, again, my information's in there, and we can always kind of talk through later what your specifics are if it's something you're concerned about. Unrelated business income, what is that? So generally, exempt organizations like you guys are exempt from income tax, right? The Form 990, it's not even an income tax return, it's actually an information return, right? Because generally you're not subject to tax. But there are certain types of revenue that can trigger taxable income even though you are considered tax exempt. And so we're just gonna talk kind of high level about what that is and what that means and what can trigger it. And if you think about it, so UBI is going to be taxable income from business activities that are these 3 things. They're a trade or business, they're regularly carried on, and they are not substantially related to the exempt purpose of the organization. So you have to meet all 3 of those for it to trigger unrelated business income. And then even within those, there are some exceptions that we're going to talk about too, okay? But something like advertising in a newsletter could be unrelated business income. So one way I like to at least think about UBI is there a for-profit out there and we're mirroring their activities, but we're doing it tax-free? That's probably a red flag, right? So if we have a magazine and we have, or a newsletter or whatever it is, and we have people who are willing to pay us money to advertise for them, right? Then that sounds like a trade or business, because there are plenty of publications out there, People Magazine, Vogue, right, that get paid to do that as well. And if you're doing it regularly, you're issuing a newsletter every single week. And is the newsletter actually related to your exempt purpose? The actual newsletter content may be, but the advertising revenue within it may not be, okay? And there's a distinction, because I've got to start leading with maybe I'll lead with the exception and then talk about it. Advertising is generally going to be an ad that has a call to action about it. So if it's, core business advisors, cheers on Cherokee Nation, that's fine. But if it's, hey, core business advisors, we want you to come buy our accounting services, that's a call to action for services, right? That's true advertising. So there is a distinction, because a lot of time in exempt organizations, we see sponsorships, and that's a lot different. So we've all probably attended a gala where it's like, the sponsor is OG&E or whoever it is, right? And all it is their name and logo. That's okay, right? That's not a substantial benefit. But again, if there's some other piece of that where OG&E is really getting something from it, I probably should have asked permission to use OG&E, but then that can trigger it. So again, there's a little bit of nuance to some of this. Selling merchandise that's not related to your mission, right? If you are selling Thunder gear, go Thunder, you probably can't do that and it be tax-free. And there's sales tax too, but we're not going to get into that today. And then things like rental income too. So generally rental income of like real property can be exempt, but if you are renting something that's more like personal property, like a facility that has, where you're also providing services maybe. Hey, you can use our building and you can also use our staff to put on your event or something like that. That may be an issue too if you're receiving revenue. Okay. Yep. Yep. Your logo's fine. Yep. That's supporting your exempt purpose. That's saying, hey, this is us, this is what we do. So that's generally okay. Yep. 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 And I do have a note, but since you brought it up, I'll just go ahead and do a quick plug here. So, thank you. She said if you're selling those merch items, like even if they have your logo, are you supposed to remit sales tax? And the answer is yes, to collect and remit. Yep. Yes. Yep. And part of that too is just remember that some organizations, and I don't know this specifically for you all, but some are exempt from sales tax, right? So you may have a sales tax exemption in place, but that's something that you have to apply for or get confirmation of. So you may be exempt from sales tax, but the general rule, right? So we have our general rules is that sale of merchandise or other goods is going to be subject to sales tax unless you meet an exemption. And some of those are outlined, like they say, like I was the CFO at Goodwill Industries of Central Oklahoma, right? And Goodwill is specifically in the statute as being exempt from sales tax. And so there are some specifically named organizations, and then there are other like kind of more generalized caveats where it says, hey, an organization that's doing this, and they may be alluding to like the Boys and Girls Club or something like that. So sales tax is really, really specific for the exemptions. Yep. I think you could definitely call and request additional information about why your original application was denied. I think that would be a really good first step, because if you find out and you say, oh, well, we filled that out wrong or whatever, then you could always file and correct, but without knowing like the specifics of it, I'm not sure. If you applied for sales tax exemption and you were denied, are there any tips for? Did they get it using the attorney? Yeah. I mean, I think that's the best path because, like, I can't, as a CPA, I can't practice law, but I mean, generally that might fall more with an attorney and they can really help kind of bird dog that. I will say, I've heard that it is just getting incredibly difficult to get sales tax exemption because, I mean, there's just not enough revenue at the state level. Hmm. Okay. Okay. Yeah. And there are, some nonprofit specialist attorneys that I can recommend that could probably help with that, go down that path if that's what you'd like to do. Just reach out, yeah. But I think it's really hard. I think they're auto denying probably everyone, to your point, right? Because they're just like, no, we're gonna make them work for it. Yeah. Yeah. Yeah, it's very specific. Like the first time I read the statute, I was like, that is really weird because it does. There are specific organizations named and then organizations with certain types of activity named, but it's really specific, like when they're kind of putting that type of activity. Yeah. Right. Right. I think it's difficult. I think they're being intentionally difficult. Tammy, did you have? Yeah. Thank you. Yeah. And we don't do that a lot. Like we're not, yeah, usually the attorneys will assist with that. Okay. If you do have unrelated business income, and we're going to talk about some more examples too, you're only required, so there's another form, Form 990T, which is the income tax return that's associated with the Form 990 that's specifically for unrelated business income. But you have to have more than $1,000 of unrelated business income, and that's gross, to be required to file that form. So also, if you kind of get tripped up and you're like, oh, I think we did this, but it only made like $700, like it might be okay. And it is taxable at the corporate rates, which is 21%. And the other thing too is you may be required to file the T if it's over $1,000, but you can also offset that income with expenses. So you can say, oh, we bought these like what were you selling or what were you doing, right? So there are likely some expenses that can offset that income as well. So as long as you're not doing anything on a really large scale, right? Then you're probably okay. And then one thing with unrelated business income, if you have two separate activities that are UBI, you have to report those separately. So they changed this with the tax reform that came out back in 2017. So used to, you could take, activity A that was netting $100,000 profit, and you could offset that income with activity B that had a $200,000 loss. And so it was also encouraging people to engage in activities that maybe, weren't in line with their exempt purpose. It didn't meet any of this, but it was generating this loss that could then offset this other taxable income. And they saw a lot of abuse in this area. So they're like, well, we've been running this kind of in higher education too, like been running this golf course and it's been, operating at a loss forever, but we know we have to have it and it's part of our program. They were taking those losses against some other income. And so there's just abuse, and that's why they make you report each individual activity. So you can't take losses from one against income for another. What is my next slide? Okay. I thought I had. Must be my other deck. Okay. Some of the Common examples we talked about, like the advertising or really anything that kind of meets that three-pronged test. We're like sort of running a mini business, right, that might be competing with somebody else. That's going to be UBI, unless it meets one of these exceptions or exclusions. And this is where I think this matters a lot for you guys. How many organizations in here are volunteer-led? A whole bunch, right? Okay, so one of the really great exclusions for unrelated business income is if you're running it with volunteers, it's generally not going to be unrelated business income, right? Because you're not running it for profit, right? You're doing a bake sale, you're doing bingo, you have an Indian taco stand, like whatever it is, right? Like generally your activities are probably going to be run by volunteers, and that's one of the exceptions that the IRS says, hey, this is okay. I'm going to have to figure out how to lead with the exceptions. I don't know how to do that, but I feel like I could just see people go, oh yeah, okay. Sales of donated merchandise. This kind of goes back to that Goodwill example, right? They're a thrift store, so they have ongoing regular sales, retail, competing with other businesses. But there's a specific caveat that says, hey, if it's donated goods, it's okay. And then passive income. Unless they're specifically exempt, yes. Yes. Hey, but you spoke up. Exactly, yeah. He said it's still subject to sales tax though, right? He said yes, yeah, unless there's a specific exemption in place. And then generally passive income, right? So if you have interest income, dividends, rental from real property, things like that, it's generally excluded from unrelated business income too. There are some special caveats if you have debt on the property or the investment and things like that, but I don't think that's probably relevant. Okay, we already talked about these. Oh, one thing I will mention for your Form 990T, like let's say that you are filing the Form 990N, right, or the Form 990EZ. The Form 990T, if you have unrelated business income, that's going to be, you're going to use your same EIN. It's really kind of like a sister form filing to that. Some common mistakes that we see with this, I mentioned this earlier, sort of the distinction between advertising and sponsorships. So kind of looking at that. One thing I really specifically spoke about was the call to action piece. The other thing that I think is important is something that's called substantial benefits associated with a sponsorship. So someone can provide a sponsorship. They say, hey, we want a table at the gala, and the return benefit, they get dinner and maybe there's like a circus show or something like that. That's all fine. But if they are receiving some form of real, like, substantial benefit from the organization or other services or some other, I hate the word kickback, but whatever it is, then that could also trigger unrelated business income. Again, I don't think that's likely here, but just something to note. We talked about rental income. And then I would say, like, the biggest thing is really just people forget to file the Form 990T, or they don't know that it's unrelated business income, or both. I've seen a 990 with unrelated business income on it, and then they didn't file the Form 990T. So sometimes for smaller organizations, you may have done something in 1 year that was a new activity and you didn't catch it or whatever. Like, that's more what I see kind of happening. It's not really like true like fraud or neglect and trying to, not have to report it. So just kind of keep that top of mind. I would also say it's really a best practice to look at all of your revenue streams. When I take on a new tax client, that's the first thing I do is I look at each individual revenue stream and I say, like, is it related to their organization? Does it meet one of these UBI exclusions? Like, what is it and how should it be classified? And that's a really great best practice to do. And then especially when you're about to do something new, right? What are we gonna do? How are we gonna do it? And does it trip up one of these tests that we need to keep in mind? And a lot of times like, hey, we want to do this, and they inadvertently have like a paid employee run it, right? Running the Indian taco stand instead of a volunteer. So you can easily mitigate that if you kind of think about it on the front end and say, oh, hey, well, we can do this. It's going to raise a lot of money. Best Indian tacos you've ever had. But like, we got to have it run by the volunteers, okay? Okay. We have about 10 minutes left. I'm going to run through this really quickly. I know that you all like put on a lot of special events or do like kind of different kind of fundraising events to support your mission. And so I had included the special event revenue on here and kind of gave some examples. But in terms of Form 990 reporting, that's not going to be as relevant for you all. If you are filing Form 990 EZ, you might be subject to the additional Schedule G. So one thing for the handful of 990 EZ filers that we have in the room, if you have more than, I think it was $5,000 of fundraising income, then you have to file, or $15,000, more than $15,000, then you have to file a separate schedule with your return. And then, but one thing that is helpful here, and this is kind of what I was alluding to on the 990 checklist earlier, is that there are some things that just because you don't have a tax return that's telling you, hey, did you do this? It's really helpful to know some of these like kind of weird, quirky rules. So if you receive a donation that's more than $250, you're actually supposed to issue a written acknowledgement letter to that donor because they can take a deduction for it, right? And that's, again, can we please get an inflation adjustment somewhere, right? Because, you know, $250, that becomes kind of the norm at some point. And so just keeping in mind that there are some additional requirements when you're soliciting charitable contributions and if they're above that amount. One thing for that I will mention really quickly with that is anybody doing like galas, like a true like fundraising dinner event kind of? Yes, we are. Okay. So on your donor acknowledgements, just one thing to remember, there are two components to that, and that's what this like example line is. There's usually going to be a donation component, and then there's going to be what this slide calls like the exchange component, which is really like quid pro quo, like what did they get in return for that? So in this example, right, when you issue that donor acknowledgement, well, it's not high enough, but if you were to issue a donor acknowledgement level, that $60 is the deductible portion for them on their individual taxes. They don't get to deduct the $40 dinner because they received that as a benefit. So just kind of something to keep in mind if you're doing those dinners or those galas, like kind of to keep in mind that there are two components, and those can get flagged on the individual returns, right? So if an individual gets audited and they look at the, you know, receipt and they're like, oh, it was for this dinner, and they don't see any back out, then that might be a red flag for the IRS that then they come look at the exempt organization. Okay, we're not going to talk about that. Okay, and then here are just some specific examples of some of the events. I knew this slide was in here and I couldn't figure out where it was. This is what I was looking for earlier. And these are just, again, facts and circumstances. Everybody has their own kind of specific set of facts for each activity, but I know some of these activities are generally some of what you guys perform, so I wanted to include that. One thing I will say, on bingo night or any gaming, how many people do gaming or bingo? Yeah, a few. Okay, so there are really specific rules for bingo, and I'll just kind of outline them. I wrote them down. So the definition for what bingo is really. Are you familiar with them since you guys are doing them? No. Okay. The definition for bingo is like really well defined for what is non-taxable bingo. So it's like really traditional bingo, and the IRS explains it. It's like a 5-box card, like whatever. But that is not include like instant bingo or mini bingo or pull tabs. Like those sort of like, those are a different level of game of chance that can trip up some bingo taxable income. I know I'm like so like nosediving into this, but I think it's important if you're doing it. There's a caveat that says you can operate bingo, but you can't violate any of the state or or local laws that are in place for that. So this isn't necessarily just a big federal thing that says, hey, you can do bingo at your fundraising events or whatever. It has to, you actually have to look through to your state and local laws as well to make sure that that activity is permissible. And then you also have to look at the activities that are also happening in your state. So if for-profit organizations are allowed to carry out bingo activities as well, like it's not illegal, then you also have to look at that to see if you actually can exclude that income, because at that point you're competing with a for-profit business. Now, there are some other caveats. If it's substantially operated by volunteers, then that's generally okay. If it's part of a qualified public entertainment activity, like if it's at the fairgrounds at like a big event or something like that, it's generally okay. And then the IRS said specifically if it's conducted in North Dakota. That is like a literal caveat, so I don't know about that. But there's a publication that I just am gonna give you for those who are engaging in gaming. It's publication 3079. I'll add it to the slide deck. So 3079, that's an IRS publication, and it is a really, really helpful write-up for the gaming rules and when it triggers UBI, and it's really, like, I say it's easy to read, but it like is drafted in a way that the lay person can read it and comprehend. These are really more geared for the Form 990, just where you're reporting officer compensation and answering those governance questions in a way that you shouldn't. But the IRS does pay attention to special event reporting if you are reporting it on your 990 or your 990 EZ. And they actually look for, I had a client one year, they added a new event and an audit was triggered the next year. I don't know if it's because of that, but they do kind of pay attention to anything new or anything different. It can tend to be a red flag. That doesn't mean don't do anything different, but just understanding the way that the automated sort of audit tools are working right now is they are kind of looking for jumps or weirdness. So something to be mindful of. These are just a few takeaways on stuff that I probably talked too much on. And then here are a few resources. Again, the IRS, if there's like anything that you're wondering about, like bingo or any, like the IRS has some really, really great write-ups on some of the activities impacting exempt organizations. IRS publication 598 specifically talks about unrelated business income if that's something you're interested in. The Form 990 instructions are really helpful, but they're really, really long. And then there's some really great information on the National Council of Nonprofits. And then one thing that I also look to is the Oklahoma Center for Nonprofits is a great resource for small nonprofit organizations. They do trainings, they do have resources, they do shared services for back house stuff, and so that's a resource I look to also. 2 minutes. Anything, we don't have much time, anything, that should be, no, I mean, if you're subject to sales tax, then you would have that. And then if you have, you know, do you have paid employees? No, volunteers, okay. Anything you can think of? It's the annual renewal filing for the nonprofits, yeah. Yeah, that's generally that. Hypothetically, okay. I love hypothetical questions. An 8,000, a what? Tractor, okay. It's an in-kind donation, yeah, like a non-cash donation, sure. And remember, there's additional forms to file if you receive like vehicles or cars and things like that. I think it's 8283, and there's an 8282. I think it's 5,000. Don't quote me on that though. But look at that for donated vehicles. Because they need, part of it is for the donor. They're supposed to also, like, there's one of the forms is for the nonprofit, one of the forms is for the donor. And that's how the IRS tracks that. Yeah. Yeah. Oh. Do you have to pay? Okay. Of this year. Yeah. November. Yep. Yep. Mm-hmm. Mm-hmm. The bond. Are you talking about like in-kind services or what do you? You you record it as revenue and expense. Yeah. Sometimes organizations like there's a specific rate that you can use like for board member service. Is that kind of what you're talking about? Or like professional services or something like that. There are specific rates and there's guidance on it. That I can send you. But you apply that rate to the hours, and then that's what you report as in-kind revenue, and then you show it as an expense for whatever it was that they were doing, right? But it's a wash for your financials. And then that also isn't report. Do you file a 990 easy? Okay, yeah. So it shouldn't be, that's a back out for the tax return, just so you know. Um, and that is not deductible to the, when did you file? Just rolling with it. Did you look at the tax exempt search? Okay. Okay. It means that they don't show you on record as being an exempt org. When do you think that you, like how long ago? Maybe it's not processed yet. Okay. Well, we can talk. Hey, thank you. I didn't say thank you, everybody. I took care of you, right? Yeah, yeah, yeah. Thanks for sitting in. Yeah.